Robinhood is about to put your stocks and crypto on the blockchain, and it could completely change how you invest. But before you get too excited, let's remember who we're dealing with. This is the same company that turned millions of people into traders overnight, then froze trading during the GameStop frenzy, halted Dogecoin transactions when things got a little too volatile, and has been fined multiple times for misleading its users. Now, they're talking about tokenizing stocks like Apple and Tesla, letting you stake Ethereum and Solana, and even creating their own blockchain to run it all. It sounds like the future of investing, right? My name is Danilo, and today I'm going to walk you through Robinhood's massive push into crypto, from tokenized stocks and perpetual futures to staking rewards and their own blockchain, and help you understand what it all means for you as an investor. If that sounds interesting to you, make sure to hit that subscribe button and ring the notification bell so you never miss future crypto updates. Alright, let's get into it. Listen, Robinhood isn't launching all these crypto features by accident. There's a clear reason they're moving so fast right now, and understanding that context helps you see why all this moment matters. For years, Robinhood lagged behind crypto-focused platforms like Coinbase and Kraken. They only offered a handful of coins, didn't allow withdrawals, and frustrated a lot of investors who wanted true ownership and more advanced tools. That gap let competitors build trust with serious traders, while Robinhood stayed mostly a beginner-friendly stock app. But things have started to change. Today, Robinhood manages over $255 billion in assets, and their stock price has almost quadrupled in the past year. A big part of this is happening in Europe, where MiCA finally gives companies a clear rulebook for launching things like tokenized stocks, staking, and perpetual futures across 30 countries and nearly 400 million people. At the same time, Robinhood knows they aren't the only ones racing to tokenize everything. Coinbase is pushing into perpetual futures and building tools for on-chain finance. Dinari just became the first company to get SEC approval to offer tokenized stocks in the US. Kraken is developing infrastructure that could blend crypto trading with traditional assets. In other words, this isn't just a nice-to-have product launch. It's an all-out sprint to win the next decade of retail investing. And whoever captures the most users early will likely set the standard for everyone else. If you're wondering why any of this matters to you specifically, here's the takeaway. The faster these platforms innovate, the more you'll get access to cheaper, more flexible ways to invest in everything from stocks to crypto, all inside of one app. But it also means you'll need to keep a closer eye on who's really holding your assets, and what happens if things don't work as planned. One of the biggest parts of Robinhood's announcement is tokenized stocks. If you're in Europe, this could completely change how you invest in US companies and private firms. Instead of buying a regular share of, let's say, Apple or Tesla through a traditional brokerage, you'll buy a token on the blockchain that represents that share. Robinhood is starting with about 200 stocks and ETFs and plans to scale to over 2,000 by the end of the year. This could remove a lot of the usual barriers European investors face, like dealing with currency conversions, limited access, and higher brokerage fees. Now, everything is wrapped into a digital token you can trade 24 hours a day, 5 days a week. Here's how it works behind the scenes. When you place an order, Robinhood's brokerage arm buys the real share and holds it in custody. They then mint a blockchain token, initially on the Arbitrum L2, that gets credited to your Robinhood account. You'll still receive dividends the same way you would with a regular share, but you won't get voting rights. So you have price exposure without shareholder influence. Eventually, Robinhood says you'll be able to move these tokens to your own wallet, like MetaMask or Phantom, and hold them yourself. That could open the door to using tokenized stocks as collateral, lending them out for yield, or integrating them with DeFi protocols. But it's important to remember that self-custody isn't live yet, and there's no official launch date for it. One of the more ambitious ideas here is offering tokenized shares of private companies like OpenAI and SpaceX. Historically, owning a slice of those firms was almost impossible for regular investors. Shares were reserved for insiders, venture capital funds, or accredited investors with deep pockets. If Robinhood can pull this off, it could democratize access to private equity in a way that's never been done before. For everyday investors, this rollout has a lot of potential upside, like more access, easier diversification, and potentially better liquidity. But it also raises important questions. So, what happens if Robinhood's brokerage faces issues behind the scenes? How will regulators treat these assets over time? And are you comfortable trusting a single company to hold and tokenize everything you buy? Alongside tokenized stocks, Robinhood is rolling out Perpetual Futures, also known as, quote, perps, which have become some of the most popular products in crypto trading over the last few years. If you haven't used perps before, here's a simple way to think about them. They're leveraged bets on the price of an asset that don't expire like regular futures contracts. That means you can hold your position open indefinitely, as long as you have enough collateral to cover any losses. Robinhood's version will let European users trade with up to 3x leverage. So, if you have $1,000 in your account, you could control a position worth $3,000. That extra buying power can magnify gains, but it also makes losses happen much faster. A single 10% move against your position can trigger a liquidation and wipe out your entire collateral. One detail a lot of new traders overlook is funding rates. Because perpetual futures don't really expire, exchanges use funding payments to keep the contract price in line with the spot market. Sometimes you'll pay funding every few hours, and sometimes you'll receive it. If you're not watching the funding rates, they can eat into your profits over time. These trades are routed through Bitstamp, the European exchange Robinhood recently acquired. Bitstamp handles all the backend infrastructure, things like the matching engine, collateral management, and settlement, while Robinhood stays as the user-facing app. For you, that means it still feels like you're trading inside of Robinhood, but there's another layer of custody and processing happening all behind the scenes. Right now, perpetual futures are only approved in Europe. In the US, regulators are a lot stricter about offering leveraged products to retail investors, so it could be a long wait before these features launch stateside. For experienced traders, this could be a huge deal, a more regulated way to access leverage without sending funds to offshore exchanges like Binance or Bybit. But if you're newer to perps, it's worth taking time to learn how margin requirements, funding payments, and liquidation mechanics really work. Even seasoned traders sometimes underestimate how quickly things can move when leverage is involved. Out of everything that Robinhood has announced, the most ambitious piece is their plan to launch their own blockchain. They're calling it the Robinhood chain, and it's going to be a layer 2 network built on top of Arbitrum. Layer 2s are basically faster, cheaper rails that connect back to Ethereum's main network. They let you transact with lower fees and quicker confirmations, while still relying on Ethereum's security underneath. That makes them ideal for high volume applications like trading or token transfers. Robinhood says this new chain will eventually be the backbone for tokenized stocks, ETFs, and potentially real world assets like real estate or collectibles. At launch, tokenized shares will still live on Arbitrum, but over time, everything will migrate to Robinhood chain. One of the biggest promises is self-custody. Today, when you buy stocks or crypto in Robinhood, you can only see your holdings inside their app. In the future, you'll be able to withdraw tokenized shares and other assets to your own wallet, like MetaMask or Phantom, and manage them independently. That could open up all kinds of possibilities, from using tokenized stocks as collateral in DeFi lending protocols, to automating dividends or integrating them into smart contracts. Alongside the blockchain, Robinhood announced several new tools that make their platform feel more like an all-in-one investing hub. They're adding staking for Ethereum and Solana, so you can earn passive rewards without leaving the app. There's also Cortex, an AI investing assistant designed to help you track performance, spot trends, and optimize taxes. Plus, they're launching a new credit card that lets you redeem rewards in crypto, advanced tax law tools to simplify your accounting, and smart order routing to help you get better execution on your trades. If you step back for a second, it's clear Robinhood isn't just adding crypto as a side project. They're trying to build a full ecosystem that competes with Coinbase, Kraken, and even Binance, one where stocks and crypto all live on the same rails. Anytime you see a platform rolling out these massive promises, especially in crypto, it's worth taking a closer look at what could go wrong. Robinhood's new products come with some important risks you should think about before jumping in. First, there's regulatory uncertainty. While Europe's MiCA framework gives companies a clear playbook, the US hasn't approved most of these products. Even in Europe, the rules could change, forcing Robinhood to pause or modify what they offer. Second, there's counterparty risk. When you buy a tokenized Apple share, Robinhood's brokerage holds the real share. If something goes wrong with that custody arrangement, or with Bitstamp, which handles perpetual futures, your access could be frozen or delayed. Third, you don't get voting rights on tokenized shares. You'll still get the dividends and price exposure, but you won't have a say in company decisions. And finally, there's the whole trust element. During the GameStop frenzy and the Dogecoin spike, Robinhood froze trading, leaving a lot of users frustrated. Even though they've improved transparency, history shows they've been willing to limit access during volatile periods. The takeaway is simple. These tools could make investing faster and more flexible, but they also introduce new risks you don't face with a traditional brokerage account. If you're thinking about trying any of these features, start small and make sure you understand exactly how custody and settlement work. So, is this really the future of investing or just another wave of hype? Robinhood is making a huge bet that blending stocks, crypto, and real assets on the blockchain will set them apart. If you're in Europe, you'll get to test this first, with tokenized shares, staking, and perpetual futures all inside one app. But with all that innovation comes some serious questions, like how much control you really have over your assets, whether regulators will step in, and if Robinhood's track record makes you comfortable trusting them when things get volatile. I'd love to hear your thoughts. Would you trust Robinhood with your investments, or do you think this is mostly marketing? Drop a comment below and let me know. And if you found this helpful, hit the like button, subscribe, and ring the bell so you don't miss the next deep dive. Thanks for watching, and I'll see you in the next one.